So Wall Street digesting some big news from the Fed after announcing only their second interest rate hike in the last decade. The move will likely make borrowing more expensive for everyone, including the government. But so far, the Dow still soaring. While gas prices remain low, the average price for a gallon of regular is $2.23, according to AAA. What a bargain. Still, that is up from last month, let alone this time last year. Charlie Gasparino is the senior correspondent for the Fox Business Network, and he joins me now. So what do you think about this?
They hike rates.
I am. I'm absolutely going to start with a fight with you immediately, if not sooner.
We'll get some more good press for that.
There you go. Rates getting hiked on the way out the door. That's kind of a, what was that gesture you do with your hand? I mean, isn't that one of those? No, I'm not encouraging. Oh.
Is that it?
Well, no, I didn't really want you to do it.
I don't know.
But that was that's to Donald Trump on the way in. Are they making his life hard by raising rates? Is it fair? Are they being mean like you usually are?
During the whole campaign, I said, yeah, the Fed will someday raise rates. That's when, if Donald Trump gets elected.
Right.
And right on the money. Listen, I think this is necessary. We're off the bottom. They raise it 25. I don't even care.
Yeah, quarter of a basis point.
Quarter of a basis point is very low. It's going to marginally increase borrowing rates on credit cards and things like that. The real sort of interest rate story here, and it's kind of necessary. I don't think you can have 0% interest rates and not have market bubbles. But here's the real interesting scenario. The market, since Donald Trump has been elected, is going towards 20,000. It's off a little bit from its highs today, but I think we're going to get there in the next couple of days, and that's a good thing because traders are saying that his free market capitalism, lower taxes, less regulations, is very, very good for the markets and for the economy. Now here's the fly in the ointment. I know there's got to be one. Don't look at short-term interest rates. Look at long-term interest rates. Look at the 10-year bond and the 30-year bond. Interest rates there are spiking because traders are also saying, wow, all this stuff Donald wants to do, including infrastructure spending, might blow up the deficit, cause massive inflation, and guess what? Those interest rates are going up. Now,
But that's ill-informed. That's ill-informed.
Well,
and yes, it is, because he's
the whole
already
bond market's
talked
wrong,
about
and you're
how
right.
he's going to. They don't believe how he's going to finance these infrastructure plans.
Well, that's what markets are for. And listen, we're not saying that is what is going to happen. I am telling you what the market is saying. And if he comes out with a marginal infrastructure deal, not like $1 trillion or $500 billion that he promised, if he comes out and says there's a public-private partnership, which I know they've been bouncing around with, we'll take the onus off the Treasury. It'll be more private. We can, and one of the plans I hear is taking money from that big corporations have overseas and maybe putting that in some sort of bonds that will
equity investments.
If you can do that offset the course, the long bond will not be the rates on the long bond will not be spiking up. And guess what? The stock market rally that he has will not be snuffed out, because one way to snuff it out is essentially to have higher interest rates that the market controls, not the Fed controls.
But he thinks that this is the beginning of that, and this is the Fed sticking it to him. Listen to what he had to say about it.
Any increase at all will be a very, very small increase, Joe, because, they want to keep the market up so that Obama goes out and let the new guy, whoever that let's call it the new guy, okay, because I like the sound of that much better, but that the new person that becomes president, let him raise interest rates or her raise interest rates, and watch what happens to the stock market.
I mean, sticking it to him, the market did go down yesterday. We were almost to 20,000. Janet Yellen said there are going to be 3 rate hikes during the year. And
by the way,
that's
nothing.
Because he's all kinds of expensive. The market didn't think it was nothing. It went down.
It went down and went up. By the way, it was on an amazing run. It's not like it erased 500 points. I mean, this is a good thing. I think he should be happy with what Janet Yellen said yesterday. She basically said, listen, we might have 3 rates. I don't necessarily believe that he's going to inflate the economy that much with his plans. She did say that. And long term, here's the thing that I think.
She said we have so much uncertainty.
Right, that's right.
She was casting all kinds of aspersions.
No, read the Wall Street Journal. She was.
I heard the actual text.
She was.
I heard her voice.
She was. And here's the thing. The problem is you're misinterpreting it. If his biggest problem is Janet Yellen, he's got no problem. His biggest problem are bond traders. Remember what Bill Clinton was told by Bob Rubin and Alan Blinder? He was telling, like, bond traders control the world. And he said, guess what? And then Clinton shot back and said, you tell me a bunch of effing guys on Wall Street is going to control everything? And they said yes. And that's what he has to worry about, convincing them that his plans are not inflationary, and that will determine the market. By the way, what's the long bond trading at today?
I wish I could disagree with you, but you're right about that.
I know.
Darn it.
Damn it.
Get off the set. All right, Charlie Gasparino, thank you so much.
You make me curse constantly.
It's all my fault.